Moise Research.
I'm Andy Myers, and this is your morning market alert for Monday, June 6th. We may see another slow start on Wall Street as investors continue to worry about the pace of the economic recovery. On Friday, the government employment report showed that just 54,000 new jobs were created last month, and the unemployment rate rose to 9.1%. That was just the latest piece of bad news and confirmed for many investors that the economy is slowing down again. Those concerns have driven blue chip stocks to 5 straight weeks of declines. Meanwhile, Asian investors got their first chance today to react to that U.S. jobs report, and most of those markets finished sharply lower.
With no major economic news on tap for today, investors' attention is shifting to the technology sector. Apple is holding its Worldwide Developers Conference today, and CEO Steve Jobs is kicking things off with a keynote speech. That's news in and of itself, as Jobs has been on medical leave for several months, his second stint away from the company in just over 2 years. Apple also surprised investors by telling them ahead of time what the focus of the event will be. The company will introduce the next version of its Mac OS X operating system called Lion, and it will roll out a new cloud services offering called iCloud, which may allow iTunes users easy access to their music libraries on the internet. Most analysts don't expect Apple to announce a new iPhone, which it has done at past keynotes. But the company does plan to introduce an upgrade to its mobile operating system. Shares of Apple are slightly higher ahead of the conference.
Another technology giant likely to get some attention today is Google, trading modestly lower ahead of the open. The Wall Street Journal reported that the company is being investigated by the Justice Department. At issue is whether Google's $900 million purchase of Nortel Networks will give it an unfair advantage in the wireless sector. In May, Google received court approval to buy the patent portfolio from the bankrupt telecom equipment maker. And moving away from the tech sector, we're also keeping an eye on a continuing takeover battle among car rental companies. The board of Dollar Thrifty Automotive Group had told shareholders not to support the cash and stock offer from Hertz Global Holdings. Its bid for the company is higher than that of Avis Budget Group, but Dollar Thrifty has doubts about the merger getting a government approval. The company rejected the earlier bid by Avis Budget, but has agreed to cooperate with both suitors in passing regulatory clearance.
We also continue to watch the latest developments out of Europe. A report in a German magazine said that Greece may get another bailout package worth more than 100 billion euros, or about $145 billion. Analysts were expecting about 60 to 70 billion euros, on top of the 110 billion it needed last year. Meanwhile, we're seeing a political shift in another Eurozone country that's being bailed out. Portugal voted out its socialist leader over the weekend, instead turning toward the center-right Social Democratic Party. The new coalition government is likely to push through austerity measures required to receive the rescue funds from the European Union and International Monetary Fund. That's the latest from Moise Research. We'll be back after the opening bell with all the market reaction.